June 30, 2018 marked the 3-year anniversary of Montgomery Global's long-only strategy, which today can be accessed by either the Montgomery Global Fund or the ASX-quoted Montgomery Global Equities Fund under the ticker MOGL. First, let's take a quick look at what the Montgomery Global Fund has delivered investors over its first 3 years of existence. After all fees, an investor in the Montgomery Global Fund, since its inception, would have been delivered a 45.5% net return. By comparison, had this investor simply owned the MSCI World Total Return Index in Australian dollar terms, then he or she would have returned only 31.6% over the same 3-year period. Now, it's one thing to have outsized returns, but it's the nature of the Montgomery Global Fund's return profile that we believe many of our investors really appreciate. Let me share with you a chart that we often talk to financial advisors about. It is called an upside-downside capture chart, and the data for this chart has been sourced from Morningstar. Now, the vertical axis of the chart shows the average percentage of the market's return that the Montgomery Global Fund captures in a month in which the market goes up. And this is slightly more than 100%. Next, the horizontal axis shows the average percentage of the market's return that the Montgomery Global Fund bears in a month in which the market goes down. And you can see that this is only 70%. So this says that based on the fund's historical returns, on average, we capture all of the upside when the market goes up, but we wear only 70% of the downside when the market goes down. Now, this is obviously an attractive return profile, and you see we are able to deliver such a return profile by owning high-quality global businesses, but only when they are significantly undervalued. We can and do hold cash in the portfolio at varying levels, depending on the opportunity set we see, and this also helps preserve capital in periods during which the market turns down. Now, I want to go back a step and just illustrate what a new investor buying into the Montgomery Global Fund or the Montgomery Global Equities Fund today is getting for their money. Shown in the chart, investors today are buying into a high-conviction portfolio of high-quality global businesses with exposures spanning information technology, financials, industrials, and others. Now, our strategy won't always be investing in these sectors in these weightings, but today this is where we are finding opportunities to invest in very high-quality global businesses which we believe are materially undervalued. As you can see, an investor buying into our strategy today is also buying a significant exposure to cash. Now, you might be asking, what's the point of this cash? Well, this cash helps protect against any potential future downside scenarios in global equity markets. And importantly, this cash holding can be deployed very quickly into new opportunities as and when they present themselves. Through this lens, you can see why we actually don't fear volatility. Volatility in stock prices often gives us the opportunities to buy great businesses at discount prices. And we have the cash on hand to do it. Looking to the year ahead, we would not be surprised if volatility picked up somewhat. Tensions between the US and China, combined with normalising global monetary policies, create conditions for a few bumps in the road ahead. That said, we couldn't be more excited about the businesses we own today, and if volatility increases, we will likely get the opportunity to add even more undervalued businesses to the portfolio. We are really proud of the performance we have been able to deliver our early investors to date, but rest assured, we believe our best days lie ahead.